Hello everyone, and welcome back to another video. Today we're going to be discussing a trade review and just some market review in general in relation to what I saw on the charts. We're going to do a lot of review on smart money handshaking, on macros, on balanced price ranges, on algorithmic signatures, on targeting, etc., etc., etc. There's been a lot of good price action not only today, but this week as a whole. Okay, I did a review last night on the channel discussing yesterday's price action from Wednesday. If you have not seen that, be sure to check that out after this video. There were some really good takeaways from yesterday's price action. I know it seemed choppy the most of the day, and I know it was choppy most of the day, but there really was some things to take away, like I said, from that video. So be sure to watch that after this one. So as you can see here, we're on NASDAQ 1 minute chart where I shorted here, took profit here, long scalped here. Okay, and then I could have squeezed a little more out of this long scalp initially, but I did re-enter here, and eventually we got those equal highs there. So we're going to walk through the trades that I took here, and then some other price action with the S&P 500, with Dow, and with dollar. So we were live in the Discord this morning watching this price action play out across indices and specifically on NASDAQ and the S&P. And here on NASDAQ, first and foremost, we have our 8:30 red folder news release. Okay, so this is, I'm going to mark out 8:30 news. All right. And then what do we get after that news release? We get this large displacement or a fair value gap. So we classify that as a news fair value gap, which we know is of higher significance than just the normal inefficiency that you see, right? There's a lot of, maybe not upon 9:30 open, but there's a lot of inefficiencies, especially as you're on the lower time frames. And you have to be able to decipher and understand the likelihood of which inefficiency is important to us, which one's likely to support price when we're bullish, which one's likely to fail when we're bearish, okay? Where inside of those inefficiencies do we want to really refine and see where we could get support? So that's what we're going to discuss here. So we have that 8:30 news event, displacement, news fair value gap, and then we chop around, and then we have 9:30 opening price right here. Okay, and this is actually labeled incorrectly. I apologize. That's 9:30 open. Okay, and what do? Very gross open, chopping around. There's no real 9:30 fair value gap as we've discussed previously on this channel. Okay, no real 9:30 fair value gap setup. But what are we doing in the opening range? We're generating, right, or engineering buy side liquidity, equal highs right here, and of course this upper portion right here. Okay, now before I continue on with kind of just how we were reading this during the live stream, from this low at 8:30 to the high here at 9:12, that's the range to gauge discount and premium as we enter 9:30 open. So I'm saying, okay, where's the liquidity? Where's the inefficiency? Well, we know that we have this news fair value gap here. And what are there swing lows here? Is there liquidity in here to target if we are to get a short setup or to sweep and then potentially reverse? No, there's not. So we need to measure the quadrants of this news fair value gap here. So I'm taking my Fibonacci from the low of the fair value gap to the high. And then I'm going to measure that out and see how price acts when we get to those levels. Now we're going to go deeper into what kind of I just discussed there in relation to the quadrants. And we're going to look at the 8th levels actually on the S&P as we continue forward in this video. But we know that if the algorithm in NASDAQ specifically is going to come back down to a discount, what's it going to refer to? Equilibrium in and of itself. But then the next target and the first target would be 25% or the upper quadrant of this news fair value gap at 18,174.75. Okay. So going a little backwards, we're watching and looking for any sort of displacement and or manipulation to take place in the opening range before we kind of can really get an idea of what's to take place in which direction we should target or when we're going to target and come down to this news fair value gap at least. Okay. So a couple things to understand that. We were watching this order block. Okay. And we're saying as long as price remains above this order block, we favor buy side. If price comes below this order block, there's nothing really stopping it from coming down to discount and the news fair value gap by extension. Okay, so just to kind of zoom in here, right, on the opening range, on the price action for the initial short that I took, we're referring to the body of this order block. If you're looking on your own charts, I'm looking at the 8:46 a.m. 1 minute candle here, this down close candle. That's your order block. And then this red line going through it is mean threshold of the order block or the 50% level. Okay, just so we're all clear. So we're chopping around, and I'm seeing time and time again support from this order block, and more specifically the mean threshold. Support. Yes, we're wicking to the lower portion of it, but look at the bodies. Every time 1, 2, 3, 4, 5, etc., etc. Every time we tap into the order block, we're closing above the mean threshold and or the entirety of the order block's body. Okay, so I'm seeing that as bullish signatures. Now, like we already know, and like you guys probably saw if you were watching NASDAQ, we have clear equal highs above 930 open. So at this time, we're just trying to gauge, are they going to run the buy side first? Are they going to run equal highs first and then run it over back down to discount? Or are they going to give us an opportunity to go short to target that discount and then reverse and go get those equal highs, right? And that second scenario, of course, did play out, excuse me, as you can see here, okay? And I'm going to kind of discuss how I validated an entry, a short entry here. So even with equal highs above. So we have those equal highs, but I'm looking again, going backwards. Support from the mean threshold of the order block. Support again, support again, support again. And then we have a SIBI with a BISI. So I should anchor it here, right? Since we have this volume imbalance, I'm going to zoom in a bit more. This volume imbalance nested, right there in this BPR formation. You want to include that in your BPR for anchoring purposes, okay? So we see that BISI and we see the bodies do what, okay? Support from that, but then we get back below it. And then what occurs? We open up, we come back down into this wick. What is this red line I have there? That's your bearish immediate rebalance, okay? And then again, I've discussed this in the last few videos, but I posted on my Twitter. If you're seeing an algorithmic signature and you're trying to determine if it's a real algorithmic signature or a false one, especially if you're on the lower time frames like the 1 minute, like I typically am for my executions, we need to have ways to determine if they are real or not, okay? Or if they're just false and it's not of higher significance. So the way that I kind of internalize that is if we have X signature, in this case, the immediate rebalance, I need to see it complete Y. In this case, Y is closure below mean threshold of the order block. So I'm taking a short off this immediate rebalance that's residing within the BPR, right? On top of this, why is this BPR higher significance? We discussed this on the channel as well. It's occurring during a macro. So X here, right, stay with me, is the immediate rebalance. And what's the rule of the immediate rebalance? You want to see expansion or an objective get completed on that candle that wicks up into it or the two candles that follow. Now, this is a 1 minute chart. Do you get a huge displacement? Are you getting an 100-point sell-off? No, but it's completing an objective. And what did I already say? That objective after the immediate rebalance is closure below mean threshold of the order block. Because recall, every time before, even just a couple minutes before, we hadn't closed below mean threshold of the order block. We were getting those bullish signatures, support from mean threshold. Once we see the immediate rebalance accomplish that finally after it failed to over and over and over again, then I'm thinking, okay, I'm on side. As long as we don't close back above the BPR here, again, it's a macro BPR, then I'm on side and I should trust the trade at least down to equilibrium and this news fair value gap. And that's exactly what we get here, okay? So just kind of continuing through this order flow here. We displaced and finally closed back below that order block. Of course, you guys know, since we already discussed the mean threshold, you don't want to see a body close below the entirety of an order block when you're bullish. And we do that here, and we displace through it and leave the SIBI in the lower portion of it. So we wick back up into it, and look at the bodies come all the way back down and deliver us beautifully to target here, okay? So this stuff, again, if this is confusing, rewind it, watch the video again. Take notes, look for it in your own charts always, right? These things are occurring every day where you see it's not time to short yet, right? We're not getting that closure below mean threshold, or at least this is how I internalize it. We're not getting that closure below. Then we get the BPR, the immediate rebalance sends us and finally closes below, okay? Down to 25% of the news fair value gap where I did take my profit, and I'm going to discuss why now. So After I go through this trade review, we're going to look at the S&P 500 and Dow Jones in relation to its respective news fair value gap that was formed upon 8:30 news release. Okay. And you guys probably saw, but if not, we'll still talk about it, of course, how Dow was able to climb down to the low and below the news fair value gap. And then ES almost reached the low, but got to the lower portion of it. And we saw NASDAQ only reach for the upper quadrant of the 25% level. So how do we gauge that here? I've discussed smart money handshaking on this channel before and how we can utilize it in our trading. And today and even yesterday was a beautiful example of how to do that within our trading, within just internalizing order flow. Okay. So if we're looking and trying to gauge, right, we have this large inefficiency and we know in and of itself, news fair value gaps are of higher significance, especially here since we have equal highs above and it's right and really the only thing to refer to in a discount of this range after that news release. We need to understand if it's going to dig back down into it. So a couple signatures are taking place here. Failure to reach 50%, right? But failure to do what? Close below 25% of the news fair value gap. That's that smart money handshaking. So as we'll see, like I said, on Dow and ES, if we were to continue lower here on NASDAQ through at least to the 50% level of this news fair value gap, you want to see us displace and close below 25% of that level of the news fair value gap, then retrace back up to a short-term premium inefficiency, PDRA, whatever, and then reach for 50%. And then if we're going to go to 75%, you want to see us close below 50%, then do the same thing. Return to premium, down to 75%. Return to premium, down to the low. That's how you kind of gauge if we are going to reach for the low of a large and or significant inefficiency. Okay, in this case, it's the news fair value gap. So once we see this delivery and we see a failure to close below, then we exit the trade. We exit the short position, or if this is your preference, you start to trail a little more aggressively. Okay. On top of this, not only that's problematic for a continuation through this news fair value gap, as we just discussed, but a potential turning point. Let's discuss here. So after we see those signatures from the news fair value gap with the failure to have bearish smart money handshaking, what do we see as kind of the next step in internalizing our order flow here on NASDAQ? We see the algorithm displace and close back above this inversion. So right here at 1024, that is problematic. And that's saying, okay, we should not have done that if we were going to dig lower into this news fair value gap, at least now, right? And I'm going to discuss, okay, this trade and just order flow getting all the way up to the equal highs. But I'm going to put now a red line here, and I'm going to delete some of this stuff, okay? So if we are looking at this inversion that we closed above, signatures for an inversion to gauge strength: failure to reach the low, support off of consequent encroachment or 50%. Again, that's the red line. And that's what we're seeing here. We can wick below it, but you don't want to see a body close below consequent encroachment. On top of that, are there any inefficiencies below the inversion? No. And we've already got the signature. So do we want to see price go back down below consequent encroachment of the inversion? No. Not at least until some form of buy side or premium objective is completed. Okay. On top of this, you guys probably already see this. And if you were in the live stream this morning inside Discord, you recall this. Let me make these a different color. So this inefficiency here, this blue line, see how this BISI is nested right at consequent encroachment of the inversion, and we're wicking down to exactly the low 18,195.50 of this BISI here. And then the bodies are closing above. Does that make sense? So this is beautiful delivery, nested PD arrays, right? Bullish signatures, failure to get to the low, all of that. Now my trade specifically, right? I did not enter off this BISI. I wanted to see if this BISI and consequent encroachment was going to support price, right? And then I wanted to see if I could frame an entry. I know it might seem a little greedy, I guess, like really needing a lot to enter a trade, but just for this specific scalp, because as I'm going to get to, we had clear daily lows on NASDAQ, ES, and Dow, which we got beautifully, actually, which I'll discuss. But I wanted to see this support, and then this right here was entry. So I'm going to delete, actually I'll change this BISI color to a bright yellow, right? And it's right at consequent encroachment of that inversion, okay? But this, as we discussed in the live stream this morning, this is a high probability bullish order block. Now, why is that a high probability bullish order block? We have to continue to just kind of understand order flow and put the pieces together. We've seen the signature from the news fair value gap. We've seen the BISI and consequent encroachment of the inversion support price, and then we displace above the inversion. This order block is in the upper portion of that inversion. If we don't want to see price go below consequent encroachment of the inversion, by extension of that, this should be a high probability order block until at least, again, we meet some sort of premium objective. So in my case, this was right here, right? Buy side liquidity right there. So is this the largest move? No, I probably could have. I was only in one contract here. I probably could have squeezed a little more out of this lemon, but I caught this move down. I'm content with that. And then as we can see here, I did a little baby scalp up there to get those equal highs, which we'll get to. But kind of just moving through this order flow, right? And understanding, are we going to, after getting this internal range liquidity, and I will label this actually right here. So we have a shallow stop hunt, and we know what that stop hunts are typically deep, right? So that's a clue in and of itself, how they just barely ran it and then return it back down to the range a bit. But if we have this internal buy side liquidity, I'm gonna make this a different color, and we know we just purged it, okay? We need to understand, are we gonna reverse now and leave those equal highs, or are we in fact gonna continue higher and get those equal highs at 18,274 even, okay? When we return to this BISI, this is important based off everything we've already discussed. We've already had all the signatures below this BISI, this green box. So price shouldn't do what? It shouldn't close below the BISI. Do the bodies support here? Yes, beautifully, right? If we were in a sell program, we were gonna go lower. This candle right here as well, after purging this buy side liquidity, should have been a bearish order block, and we shouldn't have closed above it or even mean thresholds of here, okay? So just clues that we're gonna go higher and higher. Bodies tell the story. Now let's continue this forward and talk about significant PD arrays. So we already discussed the news fair value gap. We know macro BPRs for setups within the macros or right after the macros are beautiful for entries, but you can also have them act like this, okay? See what we did here. See how after we expanded higher and reclaimed that BPR that was formed during the macro, remember, that BPR was initially utilized by the algorithm to send us to the discount objective. So after we continue to see us climb the ladder to buy side after this turning point, we're trusting more and more that this is a short-term swing low for the intraday or AM session, okay? So then we do what? The next step to really climb higher is to close back above that macro BPR, which is just another form or confirmation of that we are in a state of buy-side delivery, and we should be gravitating towards buy-side liquidity. And what do we have? Clear, equal highs up here, okay, that people think is resistance, that their sell stop is safe up here, that we're going to continue lower, all right? And this macro BPR, look, we're wicking below it, but beautifully, right? Again, we use it again and again and again. So here, with this last little scalp, I did have a bit of drawdown. Again, it was a baby scalp, right? But the stop is if we close back below that macro BPR, because look to the left and below the macro BPR, there's nothing really for us to do. So we shouldn't close below it because the bodies tell the story. So this here is what? That's an inversion fair value gap. But more importantly, it is a macro inversion. Let me make this black here. Okay, and I'm just gonna drag it out. And we're more so focused on the delivery, this little scalp here, right, to this buy side liquidity, the swing high and the equal highs, that's here, okay? What time was this inversion formed? The 1050 to 1110 macro. Okay, see how it was formed during that, and then we're working and the bodies are showing you that it's respecting that macro BPR. So just another note on that. Don't be fooled by this here to go short. right? Because that's of less significance. Because number one, we know that we're seeing bullish signatures. Number two, we know that there's clear equal highs right there. Just because we're in a macro and we get just every single inversion doesn't mean you just take a trade off every inversion, right? It still needs to fit a narrative. So the more significant, I guess, way to look for a close and then enter short would have been to see if we were going to close back below this macro BPR. Like I said, that was my stop loss, to close below. As long as we remain above the macro BPR from the 950 macro, you favor longs at least until we meet this buy side liquidity, these equal highs. So this is of less significance to me here, right? Now, as we can see here, we closed above that 1050 macro inversion, came back down into it, beautifully delivered to the highs. So just a baby scalp there. What is that? 18,254. So I guess 20 points. It's a good little scalp there. All right. So I wanted to discuss kind of just my thought process during the live stream this morning with the group, and just as I was in these trades, as I was internalizing this order flow, and just as review. I think this is really good price action. There's a lot of things to take away from this price action, but let's move on to the S&P 500 and Dow Jones. Okay, guys, and now we are looking at the daily chart for Dow Jones, and we can see this screenshot I have on the right side here. This is what we are looking at to start the week, okay? We discussed this in the algorithmic order flow video I dropped recently on the channel, the price action that took place up here where I have labeled inversion and BPR. So I won't get into that now. If you guys haven't watched that, go check it out. There was some good price action, some good signatures within this structure up in this premium here, okay? But essentially, as you can see here, we wanted, as long as the inversion holds, right, as resistance, the stage is set for Dow to reach its IPDA sell side targets. Now, the 20-day IPDA target has already been met, as you can see when we started this week here, okay? If we are looking at our anchor as April 1st here, okay, because we broke this swing low, and I'll mark this right there. On April 2nd, we broke that. So we go back to April 1st, and that's our anchor. And then we go back 20 days. So if we can see here, 20 days, that look back period, the 20-day look back had already been taken. So if we are to see continuation for Dow Jones, we go back to that anchor, that same anchor, April 1st, and then we go back 40 days, right? And what do we see? This is the lowest low in that 40-day look back period. So this is your 40-day look back objective, okay? And that level is 38,511. You can see here our target is 38,511, okay? And we got that beautifully today. So this was posted in our server to start the week, right? It's a really nice move here on Dow Jones, all the way up to what occurred up here. Let's go down to the lower time frames and see how we worked down to this level today, Thursday, April 11th. Okay, so now we're down to the 1-minute chart here on Dow Jones. And what occurred here was really, really fun to watch play out, kind of just as a case study when we were on the live stream inside Discord this morning. And we're going to talk about it here. So to start off, you can see we have 9:30 opening price. And right at 9:30 open, we run this buy side liquidity, okay? Like NASDAQ, we need to determine what range we are working in, okay? So this sell side liquidity, this was right after that news release. So 8:30 news, this liquidity pool is significant to us for that reason alone with the news, but also what is it falling just short of? Our 40-day look back. So what's our bias? What do we favor in terms of setups? Shorts. Can we scalp longs if the setup presents itself? Of course. But we favor, and we know the more high probable setups are going to be targeting this sell side liquidity 40-day look back. Okay. On top of this, just like the trades I took with NASDAQ and how I utilize this to kind of just internalize order flow, this news fair value gap, the first large displacement after that Red Fulton news release, that's of higher significance to us in and of itself. But just like NASDAQ, it's the first thing under discount, under equilibrium, right, for this range. Now, 9:30 open, like I said, we run that buy side. We have immediate rebalance right here, and immediate rebalance right here, okay? We come up into that wick. Then we displace lower to discount on the range. Now, at this point, like we already discussed with NASDAQ, how NASDAQ found support at 25% of its news fair value gap, we're trying to gauge, are we going to see continuation to that 40-day look back now on Dow Jones, or are they going to save that for later? So after we had this initial displacement right upon 9:30 open, what is price jammed in between per se? This bearish order block that I have labeled, okay, and 25% of this news fair value gap. So for direction, all I'm waiting for and what we were discussing during the live was, because the bodies tell a story, are we going to displace and close above this bearish order block first, or are we going to displace lower, continue lower, and close below 25% of that news fair value gap, which would be more likely for us to continue lower through that news fair value gap and eventually, as we'll discuss, to that 40-day look back sell side objective from the daily chart. Okay, so what do we see in relation to this order block? Well, first of all, what's above it? No inefficiencies. We have this little one here, but we already delivered to it. We already had the immediate rebalance. We already had this buy side liquidity right upon 9:30 open. So this chop here, right? We're just working this order block again and again and again. What are the bodies telling you? They're closing below mean threshold here on its one and only attempt to get above mean threshold of this order block. We can't close above. Then we fail to reach it again here. We fail to reach mean threshold here. We fail to even reach the order block here. So we're not getting that bullish signature, right? So what's the final thing? What do we want to see? Closure below 25% of this upper quadrant, right? Of this news fair value gap. What do we get here? Right here at 10 a.m. This is your bearish smart money handshaking that you were looking for and that I was looking for to see if we were going to get a potential continuation to sell side on NASDAQ. We got it here beautifully on Dow Jones. So let's zoom in a bit. And what do? At 10 a.m., we finally displaced lower after getting bearish signatures from the order block. Displaced lower, closed below 25%. So with smart money handshaking, what's the algorithm going to do? Refer to premium. What does it refer to? Back to that 25% level. Then what should you expect after the premium level is referred to? The next quadrant, which is what? 50% right there, okay? We close below 50%. Then what occurs? We open, we go up to this what? 50%. Exactly. 38629 is exactly the midpoint of this news fair value gap. And it's also what? This 1 minute SIBI. So see how that SIBI's overlapping there? That's higher probability. And by extension of that, if we had already at that point failed to reach this inefficiency, this SIBI, that was in a deeper premium, we should expect that to be a breakaway gap because we've already had the retracement to the 25% level. So if we really want to see speed and continuation through the next quadrant, the lower, and then down to the 40-day look back, we want to see that remain open. So this is high probability. See how it's nested right on 50% of that news fair value gap after we close below it? Then what do? We reach the next target, the next quadrant, 75%. Then what do? We open, we get immediate rebalance, referring to a premium, and then what do? Close below, right? Then we close below the totality of the news fair value gap, institutional order flow entry drill there, right? Failing to even reach what looks like 25% and 50% of this inefficiency, then displacing through the sell side liquidity to our 40-day look back objective for the week. So beautiful, beautiful smart money handshaking here on Dow. And this is what you want to see, especially when we have a clear target on the higher time frames. In this case, it's that 40-day look back. So this is the kind of thought process and signatures that I was looking for with NASDAQ, but we didn't get it. Now, just a quick note on this. When NASDAQ was failing to have its successful, I'll call it, bearish handshaking through its respective news fair value gap, I'm also seeing how Dow just took out that 40-day look back, which is a major sell side objective, which is another reason to be hesitant for a continuation to sell side, at least at that time when I was in the trade. So let's continue forward and let's look at the S&P 500. Okay, so now we are on the S&P's respective chart for the 1 minute. And we're doing the same thing that we did in the last two charts for Dow Jones and NASDAQ. So I'll kind of speed it up here because I don't want to repeat the same thing. But we just want to focus on the delivery as we entered and dug into this news fair value gap, the first fair value gap that was formed after the 8:30 red folder news release. Okay, so we did see some really, really nice smart money bearish handshaking here. And right here, you can say, okay, well, what are these orange lines as well? We just looked at the quadrants on Dow, and here, and we were doing this during the live stream, kind of just as a case study as well, we had the eighth levels up on our charts on this news fair value gap. So typically my focus will just be on the quadrants to avoid analysis paralysis, but you can really see what's going on sometimes if you have a large and significant, again, news fair value gap, inefficiency, okay, and you measure the 8th and sometimes 16th levels. So let's kind of discuss what occurred here. So what do? We come down into this news fair value gap, and we're trying to do what? What's the objective here when we're reading this price action? Are we going to bounce now, or are we going to dig into the 25% level and bounce? Are we going to dig into the 50% level and bounce? Are we just going to completely displace through it and get daily sell side liquidity? You guys know what we're referring to if you're inside the server, okay? But these 8th levels, what do? We close below the first orange level. The orange are the 8th levels, the blue are the quadrants. We close below the first or upper 8th level. We refer back to this order block, and then what do? Close below 8th level here, refer back to a quadrant, right? Close below aggressively the lower quadrant here, okay? And I should reverse this just so it's clear. Okay, so 75% of this news fair value gap, we close below it. So this whole way down, as we dug in and before we made this low on ES, we were seeing successful bearish handshaking where we close below, referred to premium. Close deeper below, referred to premium. Close deeper below, and then what failed? If we were going to go to the low of this inefficiency that we fell just short of, and not by extension, and then continue to the daily sell side liquidity and the new sell side liquidity here, we should have closed below this lower quadrant level, referred to this SIBI, and we should have continued lower. But what happened? Remember, at the same time that NASDAQ was doing what we already discussed in terms of turning point, right, back to buy side, this was occurring. We should have came back up into this on ES and went lower. But what did we see? We started to close above consequent encroachment of the SIBI. Then we close above the totality of the SIBI. So we're closing above a premium PD array. So we're identifying a potential turning point in the market here. On top of this, okay, what are we seeing occur? Now, if you enter long with an inversion, your stop loss needs to allow for this, a wick below, at least to the bottom, or a couple ticks below the inversion, especially when we have a discount PD array right at the bottom of this. Best case, of course, we don't deliver to this, right? But sometimes we will do this, what I'm about to discuss, so your stop loss needs to allow for this. We close above the inversion. You're long there at the high. Price does what? Comes down into a little bit of a deeper discount, but what's it doing? It's respecting this inversion, okay? And I'm actually going to delete this here now to kind of clean the chart. Respecting the inversion on a closing basis, and we're just wicking into this order block. And more importantly, if I draw a box around this to kind of depict this a little more clear, this bullish order block, we're wicking into the order block, but 1, 2, 3, 4 times we try, we can't even close in the high of the order block, right? We're closing above it. So after we complete this discount objective, if that's how I'm internalizing this delivery to the order block, and then we do in fact see those bullish signatures and by extension just support, after we complete that discount objective, then we displace higher, and then you really want to see those bullish and strong signatures from the inversion in and of itself. So if we have this inversion fair value gap, our stop loss is allowing for this in case it wants to come down to a deeper discount in the lower portion of the inversion or right below the inversion. And then once it really reclaims, I wouldn't say reclaims because the body still respected this inversion, but once that discount objective is completed, then you really want to see this type of delivery if we deliver back down to it at all. See how we're working 1, 2, 3, 4, 5 times here? We're just working the high of this and the bodies are telling you what it's going to do, right? Then we displace higher. And then you're trusting where are we going to go, okay? We take the totality of the range as we were looking at during the live stream as well, okay? And we get 50% of the range. And let me get 0 and 1 just so we know what range I'm utilizing. And that is the intraday range. So the high right here, okay, to this low that was formed at 10.17. And then we see that potential turning point. And remember, we saw the signatures of a turning point back to buy side on NASDAQ, and we saw Dow just complete that major objective, that 40-day IPDA look back objective. So really, really good delivery today. Really, really great things to take away from the market. Just looking at the weekly chart, especially if the first move on dollar is to sell side, see how last week's low, 103.915, fell just short of the opening price of this bullish order block. Okay. If we run that first, I want to see does dollar want to recover out of this weekly BISI with this order block nested within it. That's what I'm looking at, okay? Why would I want to see that ran first? Because I want to see that serve as the manipulation phase for the weekly candle. Okay, so now we are at current market price here on dollar, and you're looking at the weekly chart. And we can see beautifully, as discussed in the weekly outlook, dollar did just what we wanted to see it do, okay? The opening price, to reiterate, of this down close candle, this bullish order block on the right side, you can see there 103.885, and the low of the week on dollar, if you can see at the top of the screen here as my cursor hovers over the current weekly candle, is 103.880. So we missed it by 0.05 pipettes, but beautiful delivery into that weekly order block. And I also want to discuss just kind of not only that delivery on the weekly chart, the 4-hour chart a bit. See how we had this large 4-hour inversion, okay, which is what? Sell side delivery. Then what do we have nested within this 4-hour inversion? Okay, we have this BISI, but this BISI is within that weekly order block. So on top of the fact that we have sell side delivery and buy side delivery, this can be classified as a balanced price range. By extension, right, you don't want to see price get down into this BPR, into this BISI. It can wick into here and then we can recover, but just in terms of internalizing order flow and gauging strength on dollar, we saw beautifully here, we ran that previous week low, but where was it taking place, right? Below Sunday opening price. So it's serving, like mentioned in the weekly outlook inside of the Discord, serving as the manipulation phase for the weekly candle, right? Sunday open, we chop around, then we come lower, below an old low, last week's low, trap shorts, right? Stop out any longs on dollar who trailed their stop loss too aggressively. And then we saw that support out of the weekly order block beautifully, and we've dug back up into this order block here. So I will refine my plan on dollar, on S&P, on NASDAQ, on Dow inside of the Discord server, okay? But really, really good price action recently, and a lot of things to take away that can serve us and that we need to utilize in our trading. Okay, everyone, thank you for tuning in to another video. I hope you guys found this video insightful. I hope you guys learned a lot from it. If you guys enjoyed the video, I appreciate a like and subscribe. If you guys have any questions, please be sure to comment below or just ping me inside of Discord. Again, as you can see here, we have a private Discord community where me and my partner, Real Trader Paul, will do daily signals. We'll do live streams at least 3 times per week going forward. We do pre-market analysis every day. We do daily reviews every day. We'll do trade reviews that I take, trade reviews that Real Trader Paul takes, he'll review. His strategy is slightly different than mine, but great trader. We have more advanced teachings inside of the server and just more of a personalized learning experience with a tight-knit community. People are all learning the same strategies, the same concepts, bouncing ideas off of each other. So if you guys want that community, the link to that is in the description to RTO. We also have the free portion of the Discord in the description as well. Again, I hope you guys enjoyed this video, and until next time, I'll talk to you guys later.